Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. Today's podcast is a collaboration with Consensus, the market-leading blockchain technology company. Given its core position in the Ethereum ecosystem, we're able to bring you the most captivating industry insiders, from technologists and entrepreneurs to designers and creatives from all around the world. So join us for inspiring conversations on the future of finance, crypto, and what is making up the new decentralized web. So without further delay, let's jump into today's episode. Hi, everybody. I'm so excited about today's conversation with Sandeep Nailwal, who's the co-founder and COO at Polygon, which was previously the Matic Network, and is an expert on all things blockchain, multi-chain, and Web3. And I think we're going to have a fantastic conversation. Sandeep, welcome to the podcast.
Thanks. Thank you so much for having me here, Lex.
My pleasure. So before we get into the absolutely incredible performance of Polygon this year, I want to start at the beginning and your journey into the business world and the technology world. Can you tell us about how you got started?
Yeah, so I come from a computer science background, and right from my early days, I was into startups. So in my third or fourth year of my college, I had this analytics startup where we were, analyzing some of the data, and we did it for some political parties here in India. And then, the startup kind of lost the track in between, and then I worked as a software engineer for around 2 years with Computer Sciences Corporation, which is the world's first computer science, I think, services company from US. And then I realized that I was losing touch from the core tech. So and I thought that maybe I want to try management. So I did a management degree from one of the top three schools in India, IIT Mumbai, and then I joined Deloitte for some time in the tech strategy. Realized that I'm again going back into the services side of things, whereas I wanted to be on the product side. Then I was lucky to be able to crack a very senior position in a like one of the biggest textile company in India. They were launching their e-commerce division, so I was able to crack the CTO role over there because of my previous role with startups and whatnot. And in between, I had done a lot of part-time startup, like from e-commerce to GPS tracker system. So part-time, I was always trying my hand in the startup, but then like I was not able to leave my job because I come from like really humble background from India, and I had a huge responsibility in terms of my taking care of my family, my younger siblings and all that. So, and being the eldest in my family, in fact, my whole clan, I did not have too much support from anyone, but then around that time, around 2015, when I worked as the CTO in this company, there I actually got confidence also because I was able to do good work over there. I was like fairly appreciated over there, and doing things like having full authority over things at much larger scale. I got confidence also, and then all the credit goes to then my girlfriend and now my wife. Hashita, she told me that okay, don't worry about too much. Like we don't need a house, we don't need anything. Like we, as far as we are together, everything is fine. You just go out and take your risks, and you have it in you, and this is where your heart lies. And I think that was the time. I think I hardly took 2 weeks to kind of decide, and because a lot of people in Indian ecosystem knew about me, like I mean as a tech person, and being trying my hand with startups and all that. So I raised some small angel investment, like I think $30,000, and then I put my papers within 2 weeks of this conversation. And then I started Scope Weaver, which was a B2B kind of services marketplace, kind of like you can think of like Alibaba for services, like Alibaba, like the way Alibaba is for products, it is for the services. So that startup, like I think that 1 year was one of the most hardest working year for me, and I was able to kind of crack. Although in India, like this vendor and kind of client relationship, especially with the enterprises, is very kind of hard to crack at times. So but as a marketplace, we were able to crack some things, and that startup was doing well. But one of the biggest things was that it was not scaling enough. And I think my biggest problem was that when I jumped into like soul searched myself, and I said, I was very clear that I'm not coming here into the startup field to do like a small scale startup, right? My goal was, and then people are like always like, oh, you must be having some vision and whatnot. And at that point in time, my only kind of vision was that whatever I am doing, if there is a smaller business to do, I will better go and do a job, right? I'll be much better off as a employee somewhere. If I want to do, I want to do something big. So I was very clear, and that's the time when we started, and when I started exploring deep tech side of things, because I said that I want to build like more of a scalable business, which can take leverage of the technology and the scale of the technology offers. So that was the time I started reading about artificial intelligence. And first I read artificial intelligence, and then I moved into blockchains because Bitcoin was picking up a lot of traction. And around that time, I think I read Bitcoin white paper and the mastering Bitcoin. And then the good thing was, and I think that was, I'm very lucky because somehow I was able to see beyond Bitcoin as a currency. I was somehow like, I don't know how in those early days I just figured that this kind of paradigm right now, and this is interesting thing is, I didn't know that something like Ethereum existed by that time. But I simply thought that this is being applied for a currency logic where A pays to B, and there is a small logic. But then this could be applied to larger kind of logic computation. And then lo and behold, after like 15, 20 days, 30 days, I stumbled onto Ethereum. And I think that's when the bigger rabbit hole started for me.
Yeah. So let me open up some of these ideas that you mentioned, right? Where you were running technology for an e commerce business and you were engaged in startups and you had worked in Deloitte with enterprises. What are some of the things that you learned about supply chains, about technology, about e-commerce and shopping that stuck with you? Were there any kind of foundations out of that experience that you think are important?
I think not. I mean, not in terms of functional kind of foundations. I think one of the like, after doing all of these like small startups and working with enterprises and all that, and then running that e-commerce startup, and I think it's very hard for me to still put it to people, like I mean, especially in my current team also, that when you run a startup operationally, there are so many things that are going wrong on a given point of day. Then and you kind of reach a stage, I mean, as a CEO, you kind of reach a stage where you are okay with things falling apart, right? I mean, there would be like, out of 365 days in the journey of a startup, I mean, if you ask any co-founder, 300 days or 310, 15, 20 days would be of hard work, toil, and rejection, and like just somehow stumbling through the this space time. And then 10, 15, 20, 30 days are the days which give you hope. And maybe if you are lucky, then those 30 days can be, or those 60 days can be what Polygon experienced this year, right? But otherwise, like, those 30 days can be like smaller days also, where you feel hopeful about this. So I think those foundations were the most important, like just being okay with the chaos, just being okay with the failures, and then keep moving, just show up for the work. I think was the biggest learning for all these 2 years, right? And so that was one big foundation. The other foundation what I did was that kind of all of these things did. So I first few startups, I was the software developer. Then for next one or two startups, I was the front end designer or something like that, right? Like HTML, I did something in HTML also. The next few startups, I actually like, many people don't know that I actually even ran a very small business of cultivating honeybees, right? Because I feel I consider myself a business buff. So I saw some opportunity back in my native land where it was more conducive for these apiary kind of business. So I found some of my cousins and tried to do something with that. So that also was an operational extensive business and all that. So, and there actually I took a decent amount of loss, like which was also something like in previous startups, your loss is primarily on the time side. Like you invested time on this something, and then you lost your time on that. But then with this kind of traditional world startups, you have to invest some fixed cost initially upfront, and then if you don't deliver, then you lose that fixed cost. So that was also a very strong business lesson in terms of like having or running businesses which have a fixed cost involved with them versus some business which have technology businesses, for example, which have sweat equity involved or opportunity cost involved instead of a hard cash from your side. And then with the e-commerce and then the enterprise sides, I mean, I would say enterprise learning is like also very good because I was able to interact. One of the things that I learned from there was to see and experience this client and service provider relationship. When I was working with, let's say, Deloitte or Computer Sciences Corporation, we were like service providers to some big clients, right? And then how you kind of interact with the clients, how you have to, like, client is the king kind of nuances and things like that. Building relationship and all that was good. And then with Scope Weaver, I think that was the first time where I did like hard sales myself. And today, I anybody who asks me, who wants to be a entrepreneur later on, and he's not like a tech nerd, I tell him that you go out and try to sell something. And that's like, once selling, and the tech, that's the best combination. So when I came with Polygon, and previously it was called Matic Network, one of our strongest points have been that, because when I started with the Bitcoin and Ethereum, I myself developed dApps, I myself built smart contracts, built, like, set up nodes and things like that. So I have a fairly deep and hands-on understanding of this. Like, when you do something hands-on, you kind of visualize things happening when you're talking to any tech, when you are in any tech discussion. So I think that also gave me a very good perspective. And then when I started leading the business at Matic Network, and now, which is now Polygon, rebranded to Polygon, I think one of the biggest strengths was that I knew in very detail about tech. I knew how our tech works, and I had a fairly deep understanding of how networks work, how Solidity programs are written, how dApps interact from a browser to a RPC endpoint to a blockchain eventual blockchain transactions. And then I had a fairly deep understanding or kind of ease with selling things. I mean, like I was selling, for B2B startup. What was like cold hard selling for 1.5 years. So that was also good. And then interacting with enterprises, again, that the client is the king kind of ethos, as well as, like, being able to be presentable in front of enterprise and institutions was also a very important thing, which is now also coming in handy as Polygon expands into enterprises. We would be probably one of the few public blockchain projects which are that deep into enterprises. So yeah, as you asked, like, various of these things, various personality traits that I picked up, or some functional understandings I picked up, or way to execute things. But I still come back to the biggest skill that today I have is, like, if you ask my team also, is basically that I would say, in the matter of like deep chaos and things going wrong with this startup, or something's going wrong, I have like a zen like personality. I'm like, it's okay, it will pass. And that's the biggest learning, I would say.
Being able to move through the chaos is really important, and being able to handle the information that the world throws at you, even when that information can be perceived as failure, but is really just a signal as the world reacts to what you're doing, I think is really valuable. And your point about being able to do the many jobs that one does at a startup, so that you build up empathy and you build up an understanding of how all the pieces fit together is key as well. One thing I wanted to ask you before we get much more deeply into kind of Matic and the Polygon story is, how should our listeners think about the tech and startup scene in India? And I know that's a broad and unfair question, but any sort of contextualization would help in terms of like, how is risk taking perceived? Like, are there technology centers that you were able to get talent from? Like, what was it like to operate? And I guess how relatively hard or easy is it to build a blockchain tech company or a fintech company in India?
Yeah, so I mean, I think one thing I would say, which many people would instantly agree, and some of the people might not agree, is that Indian culture and the basic ethos of a human life and human rights and duties is very very similar to that of United States. And like the personal freedom, many people don't realize that India is a very heavy on freedom. Like, I mean, still not as great as US, but Indian democracy also provides you a very fair deal of freedom, and you can go after the government and things like that, and other things also, like failures and things like that, like maybe 20 years back. And the generation of my parents, they wanted to see, because we were coming from a socialist background, so a stable job was considered to be the ultimate success of life, right? But then I would say in my generation there has been so much of startup activity, people raising funds, especially engineering colleges, and the top engineering colleges were able to raise funds. Especially, I would say in the last 12 to 15 years, we have seen so many unicorns and all that. I think people are generally okay with their kids doing startups. And in fact, many people now get excited because startups are their kids way or their family's way to leapfrog into the top rungs of the society. So maybe my sample size is incorrect, because now I have reached that place, and then people around me or my extended family or whatever, they look up to me, and then they are promoting their kids to do startups and things like that. But I generally feel that the startup culture, like, if let's say the being okay with the failure is fairly decent. I would not say that people are like really scared of failures and things like that. So that's easy. One thing that is very difficult in India, though, is that Indian government has not been able to put forward very strong and open, kind of regulations for the venture capital. And some of the biggest acquisitions, let's say, are Flipkart, like the iconic startup from India, which got acquired by Walmart at $16.7 billion valuation. I think there were a few things in that deal. Some of the VCs were taxed retrospectively, and there was a lot of chaos in that setup, which kind of deterred a lot of VCs to invest that heavily in India. And then that they put some angel tax, which kind of made angel investments also very difficult for the startup. So funding, like, Indian startup ecosystem only lagged, I would say, or still lacks the funding, especially early stage funding. And then if let's say that part gets solved, I find Indian entrepreneurs, to be honest, absolutely top notch. Like, the numbers are also pretty big. I mean, I know that the outliers in let's say the US or Western societies, outlier startup founders would be like really outliers, and maybe Indian outlier founders might not be as big as those outlier founders in the Western side. But the number of above average to brilliant founders, I find a lot of them in India, like lot of them. And it has been like, previously when I was also just as a was a struggling entrepreneur, it was very perplexing to me that why our startups are doing great at a global level. And probably the reasons for that is that we are an open economy, not like China, so we don't protect our startups in the domestic markets. So anything that starts becoming bigger, the foreign, let's say Amazon will come into India, or Walmart will come into India and end up acquiring Indian startups and things like that. But like, still, it was perplexing for me that why there are still not that many startups. Like, I mean, there are still a huge number of startups, like, don't get me wrong, but it's not still at as huge as like, let's say Silicon Valley or maybe Shanghai or things like that. The reason being the non availability of VC funding. And somebody, even like, there was some statistics where the seed level deals or the VC deals in US are like 20 times more than that of India. So I think that part is there. But with crypto, what I'm seeing is, after Polygon and some other top-notch startups like InstaDapp and some startups breaking out, the crypto investors are coming very positively into India. Then they want to, I get so many pings from so many big VCs that they want to open in India. They want to open in India, right? So that is a very positive sign. And I feel that in crypto startups, especially when we are now getting into the DApp era from the infrastructure era, and we are ready for, bringing like next 10 million users on blockchains. I mean, you would see a lot of Indian DApps breaking out on a global scale.
Absolutely. That's fantastic. Thank you for opening up that topic. I think, there's so much cool, at least fintech stuff and identity and money development coming out of India. And to your point around funding from the crypto perspective, crypto funding is global because it comes from users, and users are global. And so this almost solves the problem of, to some extent, of capital source by going to where the demand is. And so that takes us to your work around Polygon. And maybe we'll just start with a very straightforward, I'm sure not a confusing question at all. What is Polygon? How does it work? What is its relationship to Ethereum and Web3? Let's just lay down the basics.
So Polygon and Matic Network like started as a Ethereum scaling platform. The main thing is, as I was also mentioning, that I myself was, before starting, Matic Network with my other co-founder Jayanti, we both were building DApps, right? And Jayanti is like, 100x better programmer than me. He was also building DApps for people and all that. And that's where he kind of figured out that, okay, the scalability is not there. And this is the same thing I was also realizing with my DApps. And then he started collaborating or kind of like contributing to the Plasma project. And then he and I were part of a lot of crypto communities here in India. And that's where we connected, and we realized that this is like a big opportunity. And then we want to, like, whatever he was working on, he has an idea. He showed me some POC also. I said, this is totally the need of the hour. And this is also around the time when CryptoCrities blew up. So we, coming from the Ethereum dApp building background, our goal was very clear. Like, we came from developers who were trying to build, dApps which solve some business problems. So we came from that background.
I guess even just in that, like, why were you building decentralized applications? Like, you're coming from solving these larger enterprise problems or doing e-commerce, and decentralized apps are harder to program, they're harder to run, and so on. How did that get started?
Yeah. So the reason is very trivial, to be honest. Like, what happened is that we both were working. Like, I was working on my startup. JD was working as an employee in another startup, and he also left and came into Web3 after seeing what all was happening. And I was also, like, I was moving into Web3. So we both were initially, to get our hands dirty and all that. We both, in our own separate journeys, we were doing these projects for clients. Especially, I was not building a DApp for myself, like, as a startup. Jayanti actually was doing, but not like a DApp. He was building something like a prediction game for Game of Thrones. He was like a big Game of Thrones fan. So there he started, kind of created a platform where he wanted kind of people to bet on various different kind of scenarios on Game of Thrones. And then at a particular point, he reached a place where he did not have one single payment solution for everyone, right? Like, he wanted people to bet some money on particular what is going to happen in the next episode. So that was his problem, and then he kind of stumbled onto crypto. So that was his part of the journey. I was getting into this, and I was acting as a consultant. So so the reason for that is not that visionary. It was like more of a convenience related thing. So yeah, but then point being that since we were building that, we saw that there is a problem in Ethereum that way. Yeah.
Gotcha. Yeah. So you're seeing that Ethereum, there's a lot of demand for computation. CryptoKitties is just filling everything up with cartoon cats that people want to buy, but the network is having trouble processing it. So then what happens?
Yeah. And also the problem was very clear that, this is like hardly 1,000, 1,500 people playing with this DApp, right? Imagine what happens when even like a simplest of game, CryptoKitty was not even like a game properly, right? It was just simply collectibles. Like a normal, mildly successful game has probably 1 million to 5 million users on their platform, right? So like it was very, very clear in our mind that this technology is nowhere near ready for the mass adoption. And actually, if you see, the Polygon's core thesis has been always mass adoption, which trickles down to the developer adoption. And that is where our more strategic focus always have been, and that's where we have been able to achieve a significant amount of developer traction. We'll talk more about that later on. So and then around the same time, there were a lot of like other layer one solutions, people raising funds and whatnot. One of the key things, and this is like one of the most important thing of Polygon's relationship with Ethereum, is that it was very clear in our mind that the ethos, because we participated in various like Ethereum hackathons and things like that, the ethos Ethereum community was able to build right from the start with people like Vitalik, and then other foundation members, Virgil, and we interacted with many of these people. And it was very clear in our mind that this is a completely different and very decentralized and positive sum society versus some of the other layer ones which were raising funds and all that. And many of the times the intentions were also like we could not relate to it. Like simply, even now, if you ask me, the biggest non-technical reason why I don't see any layer one surpassing Ethereum is because of this community. So like I also remember that there is a very interesting page, and I would recommend all listeners to read it. Like on Ethereum, it was on ethereum.org. The page was titled "The Philosophy of Subtraction." Right, and if you read that page, you'll get goosebumps, right? I mean, the way they have kind of narrated that we, in spite of mattering more, we want to matter less. When we see opportunities, instead of trying to control all those opportunities ourselves, we will give those opportunities back to others. In spite of like being envy of other people creating value, we will be thrilled and excited for other people and all that. So those kind of ethos, like I'm sure that many people like me who are, I mean, I'm not saying I am very capable, I'm saying, but I'm also like mildly capable maybe, and then much more competent people and capable people kind of are able to relate with Ethereum, and they feel like today also, like I don't feel Ethereum as a Vitalik Butrin's platform. I feel Ethereum is my platform, right? And then compared to that, to like any other layer one solution available, I don't think will be able to garner that feeling. So that's where we like it was very clear that we want to contribute to Ethereum community, and we want to help in scaling Ethereum. And that's where like our journey for that plasma implementation started. And then like another part was that we were very clear that we did not want to become a white paper project, right? Like that time every project was like some high fancy complicated 60-page white paper, and then there is nothing to it. Like you can clearly see that it's really, really hard to build this technology that is being talked about here. So we did not want to become a white paper project. So we initially, in fact, when we started raising our fund, we had our POC running where you could see the transactions. We could actually demo this is how it will work in reality. And we wanted to be shipping oriented and adoption oriented. And that's where like I think where we pursued, and one of the biggest advantages of us being not one of the, in fact, like we recently surpassed even Ethereum main chain in the daily average users. So that is something that has stuck to us and has helped us.
Absolutely. So, how does it work? How does it help Ethereum scale? What is attached to? Like, can you talk about a couple of the, I guess, functional attributes, and like what does this world look like that has Ethereum as a layer one, and for decentralized trust, and then these other Polygon solutions that are helping it connect into a multi-chain world.
Yeah. So I think I was recently in a conference, and then somebody asked, like I think Alex from Matter Labs was asked, and he summarized it beautifully. He said that for layer ones, the most important thing is decentralization. And if you zoom out from a to a 30,000 feet view, or like maybe zoom out on a 5 to 10 year scale, you realize that, and like there is this narrative on Twitter, which is like, yo, decentralization does not matter, users don't care, and all that. In the short run, yes, users don't care, but in the long run, if the users don't start caring, and eventually the smarter users, or the kind of the bigger users, institutional users, and all that, they realize, let's say 5 years from now, that this whole industry started on the premise of being decentralized, and then it is not decentralized at all, and you have these blockchains which can go down for a day, and then some people can collaborate together and bring them up and all that, and those kind of things. I don't think that in that mode, without layer ones being decentralized, this industry will progress much. So for us, it's very clear that layer one needs to be extremely decentralized. And I think right now, only Ethereum fits that bill. Maybe Ethereum and Bitcoin, they fit that bill. Although, like, I'm not going into those, like, minor, centralization and whatnot, but there have been, like, clearly demonstrated with the Bitcoin hard fork back in 2017-18, that even if the miners wanted to, the community can quickly have social coordination to kind of thwart some of those attacks from the miners. So coming back to that decentralization is the most important thing for layer one, and obviously the security. So if we go with the scaling trilemma, and where, like, Vitalik actually also summarized it beautifully, that out of these three you can choose only two. So we believe that in the longer run, and for layer one, it's very, very hard to kind of break this trilemma. But with the layer one blockchain like Ethereum, which has chosen decentralization and security, we believe, and our thesis is that you can build these layer twos which can act like subnets on the internet, right? Or these sub networks within the internet, like larger global internet, and where these activities can happen, like business activities can happen. And that's where the thesis is, that the Ethereum will eventually emerge as the global settlement and the security layer, which provides security to these layer 2, layer 3 chains eventually. And business activity and the scale moves to these secondary layer chains. And we also believe that these chains will also be of different flavors. And that's again, one of the core thesis of Polygon, that there is no solution fits all. No, not like everyone will need optimistic roll up, which where all the data is going into Ethereum, and not everyone will need like a fully sovereign chain. Like, there will be this is a spectrum of solutions, and we want to present along the spectrum on the multiple across the spectrum, right? So with multiple solutions. So coming back to the main thesis, that yes, Ethereum is the most decentralized layer and most secured layer, and on top of it you will build these secondary layer solutions where business activity will move, and they will use Ethereum to derive security and settlement if need be, for the larger transactions. And I think that's the core thesis over there. We believe that Ethereum will strongly emerge as the largest platform, as a layer one. And I'm like more like, I don't want to, I don't know, like, if this podcast has BTC maxis and all that, but I personally feel that, forget about, people saying that the future is multi-chain and multiple layer ones will exist. I don't believe so, because for layer ones, at the end of the day, you need that layer one native asset to have monetary policy, monetary features also, so that that monetary asset, which has the hard monetary features, can be used as the mechanism to provide incentives to keep this layer secured. I don't feel that in human history there have been many scenarios where like multiple dominant global currencies have remained. Like, it was always like British pound, before that maybe gold, before that salt or whatever, but then after that, like British pound, and then US dollar, and to this day US dollar is there. And I think now we are going to move into the Bitcoin era, or whoever it is. So I don't believe that there will be tons and tons of these global currencies. Of course, people have had those currencies like Chinese yen and Indian currency and all that, but that's more like a nation states globe. Like, with this blockchain and internet, we are already talking about a global economy where you will slowly see the world converge towards one single currency. So I don't feel that there will be multiple currencies, which means that there will not be multiple layer ones, because every layer one needs to have a very strong fundamental monetary asset to safeguard it. So I believe that there will be a last man standing game. And forget about other layer ones existing alongside Ethereum. I believe that there will be one layer one standing even between Bitcoin and Ethereum also. And my personal belief says, obviously, that that layer one would be Ethereum, because Ethereum ETH has all the monetary capabilities also, like features to it, as well as it has some native value, acting as the gas or the work token in this network, as well as eventually becoming the proof of stake token in order to participate to secure the network and earn the transaction fees. I believe that Ethereum is going to emerge as the biggest one.
Awesome. I was thinking about whether or not to ask you, but maybe just a quick hit on the following question. How do the trustlessness or the permissionless nature of Ethereum and sort of the fact that it's so decentralized and has so many participants and miners and so on, how does that transfer over? How is that evoked by the different scaling solutions and side chains and layer twos? Like, what are the mechanisms by which that is used in order to secure the higher order activity?
Yeah. So, I mean, it's very easy to understand that if you start looking at, let's say, layer two, the core philosophy of layer two is that, even if you have one single operator on the layer two, you should have ample amount of security on the layer one. Let's see, like, for example, optimistic rollups. So, optimistic rollups put all the transaction data as well as proof of that data back on Ethereum. And assuming that, you have a single operator, if that operator does anything wrong, there is a challenge period of 7 days. And if let's say by any saying anything wrong, that means if he tries to do a fake transaction, double spend or whatever, the community can quickly identify it on chain on Ethereum. And once it is identified socially, you can actually, that's why it's called roll up. That means like you can actually traverse through the history of transactions and you can roll up that chain ground up and then start it from scratch if something goes wrong. So if you see, essentially, Ethereum is guarding that. The Ethereum is the final layer of defense, that even though the execution is happening on the layer two, but the security and the sanctity of the chain is fully guarded by Ethereum. Similarly, with zero knowledge rollups, it's the same scenario, but instead of like fraud proofs, they have validity proofs. That means there is a zero knowledge circuit on the Ethereum chain, and then whatever is being executed, again, like this layer two, it needs to be understood. The layer two is an execution layer, and then the layer one is the security and the settlement layer. So you are executing some code on the layer two and then making sure that on layer one that code is properly validated. And if that code cannot be validated, then, or it is found incorrect, then you have security or economic disincentives or slashing mechanisms and things like that to kind of penalize the layer 2 actors. So that is how the security plays over there. Again, like if you go back to the decentralization trilemma, which says that out of security, scalability, and decentralization, you can only choose two. And Ethereum has chosen security and decentralization. As a layer one, you need security and decentralization. The scale comes from layer two, because layer two can then trade off a bit on the decentralization because it has to compute heavily and then choose scale and security with it. That is how you break the decentralization or this kind of trilemma, and using layer 2 it becomes amply clear. And then, this is the pure layer 2 we are talking about. If you go on the other end of the extreme, like a pure side chain, I mean, you have solutions where there is the chain or whatever app is actually building that chain for itself. They don't want to be on a shared chain. They want to run a single chain which is completely secured by their own validators and all that. But that chain wants interaction with the Ethereum main chain, right? And then it's up to the users of that chain, that when they are withdrawing assets back to Ethereum, and the smart contracts which are allowing the assets from this side chain to be, let's say, interacted with the smart contract, whether to trust that side chain or not, right? So across this spectrum, it's also about giving power back to the developers. So you will have developers which have like enough trust. Let's say some big gaming giant comes into there, or some enterprise comes into there, which who is very okay with saying that, okay, this is my own sovereign chain and I provide the trust guarantees to it, but I am integrated, I have a bridge to Ethereum mainnet where you can bring deposit and withdraw into this chain. So they provide their users an access to this open financial system while still completely controlling their user behavior within their ecosystem. So that also has a space in the industry. And then how it provides value accrual to Ethereum is that those, there is still network effects coming from these massive chains back into Ethereum. Kind of like you can also see, like for example, in Cosmos ecosystem, you have a lot of sovereign chains, but they are also contributing back to the Cosmos hub in terms of like cross-chain transactions. So across the spectrum of the secondary layer scaling, it provides or adds value to Ethereum mainnet in terms of network effects.
Fascinating stuff. I think it's really interesting to see how the game theory of this will play out in a multi-step game. I want to ask you one final question before we got to wrap. And you said that you started developing decentralized applications, and of course now by providing an infrastructure layer in Polygon, you're seeing lots and lots of uptake of that infrastructure layer by decentralized finance and kind of every single of the core DeFi projects out there, as well as by NFTs. And I've seen some interesting language around how collectible NFTs are for Ethereum, but gaming NFTs will be for Polygon. Can you talk a little bit about the applications you see choosing Polygon and users and use cases that are choosing Polygon, and like what are the kinds of things that you are seeing are now possible and are being developed that weren't there even a year ago?
I think with this layer two scale, or like secondary, I will say again, because there is a lot of like debate around like what exactly is layer two and all that, and our view of this Ethereum scaling is much wider instead of being like narrower, that okay, only this scales Ethereum. So I feel that with this secondary layer scaling available on top of Ethereum, people are able to see doing mass scale transactions, like which involves large volumes of transactions where individual assets might not be of that high value, but then they have really large volumes. Like for example, gaming NFTs, for example, and like I'm big fan of the generative art and abstract art profile picture projects and whatnot in the NFTs, and they have really opened up this space for the entire industry, I would say. But then I feel that the larger value of NFTs is going to come from the brand and celebrity NFTs, which want to drive more engagement with their end users, as well as like enterprises using NFTs in terms of again like building engagement with their customers. Similarly, the gaming NFTs, for example, have actual utility because you have that asset and you can actually use that asset. The play to earn model has proven it that you can have those NFTs and then use those NFTs within the game to buy more. Like, I mean, kind of earn more from that, right? So, point being that these NFTs have real utility. And then here, I mean, on the art side, if you go, the bigger ones which have like $100,000, $200,000, and these kind of big NFTs, the crypto punks and things like that are there, and they will have utility. But then that kind of rare and large value utility is going to be limited to certain extent. Of course, like this still will be a multi-billion dollar market, but I would say it will be much, much smaller than, let's say, gaming assets and gaming NFTs, because those items have actual utility in the world. Similarly, the engagement and loyalty related NFTs for brands and all that, they have a proven existence in terms of brands spending on the engagement related things and users buying in their for engaging with the brand, user buying stuff and all that. So I feel that this is like a much bigger stuff. And also one more interesting thing I see in terms of the use cases, especially I'm seeing, and I'm very happy that I see a lot of things like here in India, like where people are trying to use blockchain for actual public good. Like, we have people like one of the states in India, government of Maharashtra, which has around, I think it has around, I think 160 million to 200 million people, in the whole state, and that state is actually using Polygon chain to put their vaccination certificates, right, and where people can demonstrate them or show them wherever they wanted to show. Similarly, you have people like Guhar application, which is using blockchains to kind of have immutable complaints or grievances registered by people who are in the tribal and the Naxal affected areas. So that is also pretty big. And then today I spoke to a couple of very intelligent people who are also looking to use for police FIRs. Like FIR is the first information report, and in India, like in the hinterland, many a time it happens that like some corrupt local police official, let's say there is a powerful politician, and he or somebody from his clan committed some big kind of crime, and then police won't even register the case, right? So we are even trying to solve that can we kind of have an immutable record of that FIR done on blockchain where nobody can deny that this was actually filed. So I mean, things like that which kind of excite me. And then I think the next big, like, first NFT is going to be our, for all of us in the industry, it's going to be our Trojan horse, which will bring the masses into blockchain. And but I think that, from there, the governments and public goods and DAOs are also going to be like massively big. So that's where Polygon kicks in, where you need larger kind of engagement, larger number of transactions in volumes. And Polygon and its constituent chains will provide various opportunities for these such applications to exist on chain and eventually have their footprint back to Ethereum.
That's amazing stuff. You said earlier that it's, we're getting the next 100 million of people into blockchain. I think with Polygon, we'll get the next billion and the next billion after that. So thank you so much, Sandeep, for spending the time with us today. It's really great to hear your story and the fantastic progress that Polygon is making.
Thanks, Lex. Thank you so much for having me here.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.